We are covering story of a 35-year-old company, not from the incorporation, but from the point it creates interest. So here is the company, debt burdened with total dues of approximately 12,000 crore. Company slips out of the hands of the promoter after the approval of NCLT. Acquired by the second highest bidder for rupees 4350 crore. Wait a minute, not by the first. Why? Not part of this coverage because there is a lot more interesting fact than this. Okay, to just keep the viewers updated about the highest bidder, Adani it was. But then they withdrew the bid. Now, out of 4300 crore offer price, the acquiring company had to actually pay only rupees 1100 crore. So what about remaining 3250 crore out of the bid price? It was predominantly done through fresh debt by the very same bank which had taken haircut in the earlier loans. Yes, the same banks financed 3250 crore. You might have heard the case of taking loan to repay the existing loan. But this is a special case, like borrowing loan from bank XYZ to repay the loan of XYZ. Now let us give you a hint with some price history to identify the stock before we continue further and reach the main part of our story. The share of the company was relisted in Jan 20 after the company restructured itself at a price of rupees 17 and then it skyrocketed to rupees 1535 on 29 June 2020. That's 89 times in just 103 trading session. Hope you got the company we are talking about. Yes, the most talked stock of 2020, Ruchi Soya. Facts till now was just to make you recall the company we are going to talk about. The main finding relating to Ruchi is ahead. Now let's get back to the accepted bid price, 4350 crore. We discussed earlier that it was done only by infusing 1100 crore and remaining being financed by the bank. Now out of this 1100 crore, only 200 crore is via equity. So what about remaining 900? Remaining 900 is via preference and non-convertible debentures. So the other two instruments are issued in a way that it can be returned back in future from Ruchi to promoter. So effectively, equity infusion was just 200 crores for a bid value of 4300 crore. Let's get deeper into the story. We need to understand the equity part in detail. So for the infusion of 200 crore via equity, 29.25 crore equity shares were issued at a price of rupees 7, which totals 204.75 crore. And it amounts to 99% of the holding. So 99% of the holding is now with Patanjali Group. Note down this acquisition price of the acquirer. It's only rupees 7. Now, as per Sebi, company has to bring down its promoter holding below 90% within 18 months of acquisition and then below 75% within 3 years. Now it's the time for the Yoga Guru backed company to reduce minimum 9.89% of the total equity of Ruchi Soya to meet Sebi's first milestone and bring total holding to 90% maximum. 18 months happens to be June 2021, this month. And so, their FPO has been announced. Before we talk about the FPO, we have to get back to the recent price chart. From the high of 1500 of June 20, it had fallen to 650 in May 2021. And suddenly, company has a reason to rejoice because it is acquiring a company. A 23,000 crore market cap company is acquiring just a 60 crore company, which is not even 1%. But still, market has a reason to rejoice, which is being reflected in the stock price since acquisition. And the stock has approximately doubled since then. Now let's get back to the FPO. A look at the filed draft prospectus with Sebi. This prospectus looks so attractive. What a good number compared to its peers. What a revival of 34-year-old company in just 3 months. Was it not managed well earlier? Or is it the new super management taking the business to the next level just after 3 months of acquisition? Okay, but wait for a minute. Can we have a look at the annual profit just 3 months from the day it was acquired? It's not again accruing from the normal business, but from the exceptional item. Now let's also check this. This income is from writing off the borrowing, the debt which they did not pay. So, if we recalculate the profits and the EPS, it comes to only rupees 225 crore with an EPS of 25. Now this seems to be a better reflection of books of the company. It would have been better if the company would have come across with their latest financial statement and not taken abnormal year. While research, we also came across this. We are not saying that this is a peer activity, but just an error where a popular website posts these as the recent figures yesterday. Enough for an investor to make up their investment decision. Now the conclusive part of our research. Can you find a coincidence? Did you pay attention to the initial acquisition amount of Patanjali and the current FPO? Can you find something? Yes, coincidentally, it happens to be same. Now, there are two options with Ruchi Soya, 10% dilution or 25%. We also worked out our calculation for 10% dilution, which comes to the price which comes to 1470, and for 25% it comes to 456. Considering today's market price of 1251, 10% dilution seems to be more likely. Now get back to the noted figure of acquisition price. I asked you to note down. The acquisition price of the share was 7 rupees in Jan 20. How much is the price today? It is this. What does it mean? 180 times in 18 months. Leaving the investor with a question. What is that one reason you would invest in the equity of this company, which would be offered at a 200 times the acquisition price of the promoter in less than 2 years, and that too without any significant change in the business as a model?